Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for our monthly crypto segment, we have Steven Ehrlich. He's the director of research of digital assets over at Forbes Crypto to discuss how it has reacted from the Fed rate hikes in the past and what we can expect, as this is a big week for not just the crypto markets, but markets overall. And Steve, it's great to see you as always. Yes, markets across the board are down, a little bit more obvious in the crypto space after a pretty positive week. Give us some background in terms of what's going on.
Great. Yeah. And thanks, Jill, for having me again. It was a pretty good week or so for crypto after several months of just seeing the markets go down. A big catalyst for this was the target date for what's known as the Ethereum merge, which is tentatively planned for September 19th. This is a big day because this right now is the date when Ethereum will switch from proof of work energy, sort of an inefficient energy setup used to process transactions, to proof of stake, which many people see as the future and is much more of a sustainable process and should help the network handle more transactions. It's a very big technological lift. I've heard it likened to changing a car's engine while it's going 70 miles an hour on a highway. And the closer that we get to this actually happening, the less risk is associated with the transition. And that really kind of was bullish for Ethereum. But aside from that, because Ethereum grew, it kind of brought along the rest of the market with it, led by a lot of its competitor altcoin tokens like Cardano, Solana, Algorand, so on and so forth. Ethereum actually got up to almost about $1,700, which is the highest that it's been in several months. And it crossed its 50-day moving average, an important sort of trend line. And ironically, it actually brought up Bitcoin too. Bitcoin briefly crossed over its 50-day average, as well as it approached about almost $25,000 for the first time in a while. Unfortunately, we're still in a bearish trend. Macro sentiment remains down, and especially this week, as you mentioned, with the anticipated Fed rate hike, another 75 basis points, which really kind of seems necessary given the fact that inflation in June was at 9.1%, an absolutely massive number. I mean, it was kind of, people are still remembering the environment in which we're operating right now, and crypto markets are down. That's not the only reason, of course. We've had some big news also come out of the SEC that has certainly dampened sentiments too. Yeah.
So without being too company specific, of course, it's no surprise it reported the investigation of Coinbase, and technically what does a security mean? And this is not a new conversation that regulators have been thinking about, and what crypto exchanges need to be thinking about. So really, what are the key issues at play here? And why is there a sense that this just kind of came out of nowhere?
So here's the funny thing. I may actually push back to the idea, not to push back to your question, but in some ways, this didn't come out of nowhere. It really was probably expected for quite a period of time. The real question, and there's two data points that really kind of, or two events that, or pieces of news that occurred that really kind of brought all this to a head. One, last week, the SEC initiated insider trading charges against a former product manager at Coinbase and two associates, alleging that they engaged in insider trading, essentially front running new token listings on Coinbase for 9 separate tokens. It's a common understanding, or it's a common observation in crypto, that because of Coinbase's role as sort of like the prominent exchange, when tokens get listed on the asset on the platform, there is a bit of a bump there, a price bump at least, for an initial period of time. Indirectly in those charges was the allegation that those tokens were securities, and Coinbase, and again, like not just Coinbase, but basically every other US registered crypto exchange says that they do not list securities. They're not allowed to because they're not registered as such with the SEC. Then obviously it was reported last night that Bloomberg also is investigating Coinbase for listing unregistered securities. And this is a really big deal. And I'm actually kind of surprised that, or maybe it's just because the SEC has not confirmed anything. I would expect the SEC, honestly, to be investigating many other US-based exchanges because they all operate in a pretty similar way. I have some knowledge of this because I used to work at one, Kraken, which is the second largest exchange in the US, and these exchanges have very robust programs where they essentially try to mimic what the SEC does, going through a process or a test known as the Howey test, to determine whether or not an asset is a security. And they have to be pretty comfortable in their judgment that these assets are not securities, or else they cannot list them. Securities, obviously registered securities have to go through all sorts of reporting requirements. And if someone wants to sell a security that's not registered, they have to do so under certain exemptions, which means that typically they exclude retail traders that perhaps are not as sophisticated as other more experienced traders in the minds of the SEC. So this is a pretty big deal, and it's going to take a while to kind of figure out how all of this is going to play out. But this certainly is a battle that the SEC has been looking for some time, and I think the crypto industry as a whole is looking forward to contesting as well, because in the minds of most people, they don't think they're doing anything wrong.
Right. Well, I mean, and Stephen, to your point, some sort of a resolution needs to be made here because, this can make or break a business at the end of the day. I want to talk about Tesla for a moment here, selling off 75% of its Bitcoin holdings last quarter. What were the implications on the market with that?
Yeah, so this was a really kind of interesting case here. I mean, Tesla sold 3/4 of its remaining Bitcoin, about $936 million worth, and the market really kind of yawned. I remember went back, I think it was in the winter of 2021, early 2021, when Tesla announced that it was buying Bitcoin over $1 billion worth on its balance sheet, and you just saw an immediate price go up. It was a huge deal. People thought that it was going to be the beginning of a wave of other non-crypto native firms buying Bitcoin, putting it on its balance sheet. Obviously, we saw Square do some of that, but it didn't really happen. And when Tesla sold the rest of its Bitcoin, the market kind of blipped. I personally don't think it was really that big of a deal. They sold it months ago, actually had a little bit of a profit, even though they did have to take an impairment loss over the course of this year. But in my mind, that the bigger company, or the bigger set of companies to pay attention to when it comes to selling Bitcoin on the balance sheet are the Bitcoin miners. Outside of previously Tesla and perhaps Block, these Bitcoin miners, publicly traded ones in particular, are the largest corporate holders of Bitcoin, and their business model for the most part is to mint Bitcoin and then hold on to it for dear life until hopefully it goes up to $500,000, $1 million, so on and so forth. But many of them have been forced to, I wouldn't necessarily use the word capitulate, but have been forced to sell the assets that they mine to pay off debts, pay off orders for more mining equipment, electricity, and that sort of is also a symptom of them having to dramatically leverage balance sheets as they were looking to grow in the middle of this bull run. In May, actually, all publicly traded Bitcoin miners, they sold every single Bitcoin that they mined, and that was kind of a stunning statistic for a lot of people. So that really, in my mind, is the category of corporate to pay attention to when it comes to selling Bitcoin on its balance sheet.
All right, Stephen, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great, thanks, Joe.